Okay, everyone. Welcome to tonight's session of Public Administration 509, Applied Political Economy. Tonight, we've got several items to discuss, including the reading from Chapter 9 on the need for information as we close out this particular part of the session. So we've got some discussion to have. There's a couple of items we need to cover in advance of that as you're working forward and working towards assignments that are due in the second half of the semester. So we will discuss those here in just a minute. Hope everybody's been having a good week, and I appreciate everybody for joining me here remotely tonight. I was not going to be able to make it into Raleigh today due to some work that I had to do here today and late this afternoon. So I appreciate everybody's willingness to meet online. We will meet in class next week. And as you know, based on the requirements, the mask requirement will no longer be in effect when we meet on March 10th. So I just wanted to make that aware to everybody. But I also know it's your final class before spring break. So they've got that going for you as well. So what I want to do tonight is I want to start off by having some discussions and some additional information about the two assignments. I appreciate students who reached out and asked some questions in regards to both assignments. We have the book summary memo, and I'll talk a little bit about that as well as the group project. We'll have some brief discussion on podcast number 2, which the assignment is, I think y'all are finishing up that assignment right now. And then we will get into discussion of the assigned reading, which involves chapter 9, the need for information, as well as do a class exercise, and then we'll review the assignment for week 8, which is next week. There's a reading assignment as well as a follow-up assignment with respect to class and lecture activities. So we'll talk about that as well. So to kind of kick off, before I get into the discussions of the two assignments, are there any questions? Okay. All right. So let's go ahead and get into discussion with respect to the book summary. Obviously, y'all are reading and are continuing to read the book that I assigned, The Changing World Order by Ray Dalio. I've been reading it myself, and I think it's an excellent book, and I hope that you're finding how the information that Mr. Dalio is sharing kind of relates to our class. On its own, it's a good way to learn how a lot of what goes on in history is of a cyclical nature. That's a very common way in which people like to look at it, particularly from a historical perspective. And I tend to agree with that. Human nature is not as new as sometimes people think it is. Typically, we have a tendency to repeat our past mistakes. It may pass several generations, it may pass several hundred years, but we have a tendency to repeat mistakes of the past, either more recently or from longer periods of time before. And so this book has kind of like two main parts. There's a part that kind of explains these cycles, and then there's a second part which kind of then uses some historic examples to show these cycles in action. And so what your book, what your memo is going to do is, what you're going to do in this memo is you're on your own, and you can choose whichever one you want, or your reading group can choose, but each student is responsible for their own assignment. You are going to choose one of chapters 9 through 12. There are 4 chapters in this book which kind of provide a narrative for the big cycle of rise and decline in 4 separate historic periods. Yeah, I would like for you to read each of those 4, but you would pick one with respect to the memo. Your job in terms of the memo is to review and summarize the applicable big cycle, and in the course of your review and summary, identify lessons that are applicable to the current climate. Now, the current climate is covered, I believe, in chapter 12. And if you follow him on LinkedIn or Facebook, you can kind of see that he's making a lot of references in terms of trying to relate what's currently going on in America and the world, and he's trying to apply it with his to his theory. I'm sorry, chapter 11, not chapter 12, more chapter 11, but we can look at it from a global perspective as well. So you don't necessarily have to look at it domestically if you want in terms of applying to the current climate. But what I want to see is basically that you kind of understand and can summarize these concepts that he is presenting, and then be able to kind of show what is it about these past events that kind of prepares us in better understanding what is going on currently. The guidelines, there is a memo template that I have loaded. I have loaded it in the Google Drive in the PA 509 folder. It's not under a subfolder. It's memo template. You just double click on it. And as you see from the screen, you see that this memo template appears. This is the same template that I expect you to use for this book. I expect you to use it for your group project report, as well as for your final, when the final is assigned at the end of the semester. So you'll use the same template all 3 times. You can download it and use it in Microsoft Word, or you can choose to use it in Google Docs, whichever way you want to do it. No more than 5 pages, single spaced. I have to review over about 2 dozen of these reports, and so I need them to be concise. I will also tell you from a professional perspective that most let me backtrack a little bit. When I assign projects or make assignments to students at this level, what I am trying to do is prepare you for the type of work and for the nature of the work that you would be doing in a professional environment. And one of the things when it comes to reports and papers is that while it's important to be comprehensive in your work, it's also important to be concise and brief where appropriate. If you go to some schools out there, some schools of public administration, they try to limit everything to 1 to 2 pages. That is something that, as you learn from your own professional experience, you learn to be very important, particularly that first page, making your point in that first page, so that when a manager is looking and reading it, they can get an idea of what it is you're trying to say in as quick of information as possible, because they are bombarded with information from all types of sources. They're bombarded by reports from multiple departments or multiple divisions within a department, and so they need for there to be very concise information. And so what I try to convey is that I want to see you kind of move in that direction. I realize that there are probably members of faculty that request longer reports and longer documentation of work, and I believe there's a place for that. But I would imagine that most of you are going to be going into professional practice. Some of you are already there, and so it's important to kind of focus our attention on work product, on doing work that's consistent with work product. And so that's why I try to keep these short. You also do not need to include endnotes or footnotes, since I'm assuming that you're using the text. But if you do reference text directly, it does need to be properly noted from the standpoint of using quotes. So if you do include passages of text, make sure that they are in quotes and appropriately in that perspective. The deadline, as we talked about when we discussed the syllabus, is that these papers, these memos, are due by email to me by 6 p.m. on March 24th. So they're due in 3 weeks. So hopefully y'all have started reading the book. You do have spring break. So before this, I did not assign it for prior to spring break. I wanted to make sure I gave you all spring break because I realize it's a pretty thick book. I understand that. Sometimes I have assigned 2 books in a class, and this semester I only decided to assign 1 book, but it's a longer book. But I do think that you will find a lot of use in it in your understanding of economics and your understanding also of politics and kind of how societies work. So are there any questions with respect to the book summary assignment? Okay. So now let's get into the group project. Every group has selected a topic, and y'all received an email over the weekend that where I identified what those topics are. So I didn't get any objections from anybody. We did replicate one topic twice, and I have done that before, and I'm okay with that. So everybody, I appreciate everybody for what they've done. What I would like for you to do with your group projects, to not make it too difficult, but at the same time make it effective, is in respect to your topic, I want you to examine a specific policy that's related to your topic. The topics are pretty wide ranging, but there are specific policies within those topics that I want you to focus on. And then I want you, in the course of your paper, in the course of your memo and your presentation, as you're evaluating this policy, work to apply elements that we've learned with respect to political economy, the development of goals and objectives with respect to these policies, understanding externalities. There should be research out there that you can evaluate with respect to policies to understand, to be able to identify externalities, as well as to be able to determine externalities. Particularly if you can look at policy that has not been developed, that has not been implemented. I mean, you can look at policy that's not been implemented and try to say, okay, we can predict and provide some backup to show how you would predict certain externalities occurring. And then also what I would like for y'all to work on is understanding the problems associated with coordination and commitment. We've covered all these areas in previous chapters of the book and in lecture. And as I went through the syllabus, I think these are the key elements to understand. The information we're going to cover tonight and the rest of the semester is important, as is the other information we covered. But I really think understanding these is of most benefit to you in your professional futures, and also in your research. So I want to focus on these particular areas. Each group will be responsible for submitting the following. It'll be done by email, and that email has to be received no later than 6 p.m. on April 14th. First is the report, again, using the template memo, no more than 10 pages, and that 10 pages, it does need to include end notes. Do not use footnotes. Please use end notes. I don't like footnotes all that much. I prefer end notes. So please use end notes to show me what materials you reference in the sake of developing and doing your research for your report. There is also a PowerPoint. I realize that people have differing opinions with respect to PowerPoint, but I do believe that it has value in terms of summarizing information and being able to present information. However, I do have a limit of no more than 10 slides. Then there will be a presentation that you will make in class. So you will email me the report and the PowerPoint. Those things you will email in advance. What you will also do is you will be prepared as a group to present in class on April 14th. And this class will be done on Zoom. Just because I realize that some groups are mixed and that they have some people that are attending classes, some people who are participating virtually, and I would rather just have everybody doing it in the same environment. So we will do it on Zoom. At this point, I am still trying to figure out how long the presentations will be. I imagine that they will probably be about 10 minutes each, is probably what we're going to go with. So just keep that in mind as you are working on your presentations. That you will have about a 10-minute limit. Again, 10 slides, 10 minutes. Typically, you want to spend about a minute or so per slide. So that's kind of the guideline to use for that. Are there any questions with respect to the assignment for the group project?
Are you our audience, or should we be directing it to a certain legislative body or something of that nature?
No, I'm your audience.
Okay.
Think of me, basically, I'm your audience, but think of me as a manager.
Okay.
So treat it as an internal presentation.
Perfect. Thank you.
Okay. Any other questions? Okay. For those who are joining us a little late, for those of us that are joining us a little late, what I have done so far is I've gone over the two assignments. So I encourage the two end of semester assignments, the book summary memo project, as well as the group project. I've gone over those assignments and the descriptions of what those assignments should include. So I encourage you to watch the recording of this video. What I will probably do also this weekend or first of the week is take the information from these two slides and distribute it by email for everybody. But I also encourage you to watch this video, which should be available the next day or so, so that you're aware of what the assignments are. Are there any other questions before we go on? Okay. So what I want to do now is I want to take a little bit of time to talk about the second podcast. And I believe I've given you an extra day or so for the completion of it. Is that correct? I don't think it's due to, it wasn't due tonight. I think it's due in a day or two, correct? Yeah, okay, thanks, Morgan. Yeah, March 7th, that's what I thought. But I wanted to go ahead and just kind of give people a chance to share their thoughts. We're not going to go over the questions that were asked, but I just wanted to get some thoughts of people. What did y'all find interesting about the podcast? About what was shared by the budget director?
I thought it was interesting that they basically had to throw out the whole budget they'd been working on all year in response to COVID.
Yeah, that was a challenge for a lot of us. And in Virginia, it was a big challenge because they start their budget process a little bit earlier than most of us here in North Carolina do. Virginia's governments work on the same fiscal year that ours do, which is a July 1st to June 30th fiscal year. However, in Virginia, they have to have their budgets done by the end of May. And there's actually, and in some cases, they have to have it done sooner. And there's actually a very important technical reason. In Virginia, there are a lot of jurisdictions that when you pay property tax, you pay it in two payments a year as opposed to one payment a year, which is typically how it's done here in North Carolina. And so when they set the tax rate as part of the budget, that actually affects a payment that is usually due in June. So it's actually a payment that's paid prior to the end of the fiscal year. So they have to know the tax rate before they can send out the bills. So the city that I worked for in Virginia, Manassas, that was the case with us. So normally we were getting the budget done in late April, early May. So then we can quickly send out tax bills so that people would make their payments because the taxes were due on June 15th. Half of their taxes were, technically half of their taxes were due on June 15th based on that bill. So, so they have a far more accelerated schedule. And so for a lot of them, as the manager talked about, they had to basically go back in various ways because they were almost ready to submit their budgets when this happened. They typically submit in mid to late March. Here in North Carolina, we typically start submitting budgets in early May to mid-May. So we had a little bit of time here in North Carolina to be able to adapt our budgets with the expectations of COVID. And of course, that was a significant challenge. We also had the challenge, and this wasn't talked about as much in the podcast, but there was also the challenge dealing with the current fiscal year because this happened. We recognized that it had the strong potential to affect revenues and expenditures for the remaining 3 months of the fiscal year. This happened, the primary shutdowns occurred in mid to late March. That was really when, from a federal perspective, a state perspective, and a local perspective, we started taking it very seriously here in the United States. And so what that meant was that we had to basically assume that there was going to be dramatic changes from a revenue perspective, as well as from an expenditure perspective in the final 3 months of a fiscal year. And when you think about how money is spent throughout the course of a fiscal year, that doesn't give you a lot of time to implement reductions. If you're expecting revenues to go down, which was our initial thought was that revenues would go down as a result of COVID, that revenues in those final 3 months would go down, particularly from sales tax or from other revenues. So we had to, for example, here in Rocky Mount, we had to move forward with some very drastic reductions to curb our expenditures in the final 3 months of the year. And then, of course, continue with some of those reduction measures in the next year, because we also didn't know how long this pandemic was going to last. And Bree is absolutely right. They talked about hiring freezes, halting of discretionary spending. Those are all very normal and very traditional approaches. From that case. And Ian, I want you to talk about yours in just a second, because I think you can provide some excellent perspective in terms of what we're dealing with now. But there was a lot of challenge. Now, I want to first of all ask everybody this: what do you think actually happened to revenues from sales tax as a result of the pandemic? Some of you may already know this answer, but what do you think happened? Catherine and Curtis. Okay, how many of y'all, you can use the thumbs up signal, think that they went down? Okay, so everybody's kind of figured it out. They did not. Absolutely. Why do you think that they went up?
Stimulus checks.
That was a big part of it. Interestingly enough, though, they actually went up before stimulus went up. Stimulus certainly contributed from it. Drew is correct that people went from goods to services. That definitely, went to goods from services. I think Drew was trying to be, I think it was just a swap. And Holly got it right. Yes. Spending changed to more taxable spending is the way I would say it. Certainly that did happen, and we did obviously see a lot of reduction in services spending, because a lot of services found themselves kind of closed out as a result of it. So people moved into goods. We also had the fact that even though a lot of sales went online, overall sales, we captured a lot of the sales tax from that because of the Wayfair decision. Yes, Holly.
Yeah, kind of on that note, and in transparency, I haven't had a chance to listen to the podcast yet, but just from, and Ian can probably speak to this better from what he said in the chat about his internship, but at my job, I work at Habitat on affordable housing policy. We're talking with Wake County commissioners trying to get a property tax relief appropriation in the next fiscal budget. And it's just interesting, like this impact of COVID adds a whole another layer to that conversation, just with them needing to react to how the budget changed due to the pandemic. So it really has shifted things, I'm sure, in Wake County and beyond.
So can you describe, when you're talking about a property tax relief, kind of describe what y'all are looking for? Because this is a pretty significant topic here in North Carolina in general, because there's not a lot of options for relief. Kind of describe your all's approach to it.
Yeah, to put a long story short, local governments are limited in what they can do in terms of property tax relief, just given state law. So they're not able to, change the rates per household and things like that. So the kind of workaround that we're seeking is rather than being directly for property taxes, it would be the homeowner would pay their property taxes and then receive a grant payment back to them to cover that cost. And it would be specifically for homeowners with lower incomes who have been homeowners for at least 10 years to try to target it a little bit more. We're still working through what the exact AMI targeting would be. Right now, our proposal is at 80%, which we know is really high, but we want to leave some wiggle room. But it would be essentially a grant paid back.
So they would still have to come up with the money. So there would have to be some kind of mechanism out there privately for them to come up with the money so that they could be paid back through a grant.
Yeah, I mean, it's an imperfect situation, but we know that the property tax cost is putting a burden on a lot of homeowners, especially in Southeast Raleigh.
Absolutely. I mean, we had some mechanisms in Virginia. There are some mechanisms in Georgia that I was familiar with. And that was one of the things that I noticed moving here, was that there aren't a lot of mechanisms available that local governments can use. And because the assessment structure is very restrictive here, it does create a problem, especially because even if you are able to reduce the frequency of assessments down to 4 years or to 6 years, as the case may be, from the 8-year period of time, that's still a significant increase. And for a lot of these properties, their assessments go up significantly higher than average. So even if the tax rate goes down to a revenue neutral level, because their increase is higher than the average, they still see an increase in their tax bill. And that's before you take into consideration that I can imagine, Holly, that a lot of these individuals you're talking about are probably in fixed income situations.
Yeah, exactly. And some of the property tax increases since 2016 have been like 80 to 100% increase, which is just insane. So it's definitely a tricky issue, but yeah, it's very, very limited options in North Carolina. And the property tax relief programs at the state level target a very, very narrow population.
Right, they are. And that is something that I think the General Assembly really has to address, because it does contribute to gentrification, because it puts a lot of people in situations where they're simply not able to afford the taxes. Most of us, when we pay taxes for property taxes, we pay it through escrow, through our mortgage payment. So, it's kind of the annual cost of living. But for a lot of people, this is an annual bill that they have to figure out how to pay on an annual basis, particularly people who've been in their homes for beyond their mortgage period. They own their home, but they still have limited incomes and are stuck trying to figure out a way to make these payments. Ian, I want to circle back to Ian. Kind of describe a little bit about what's going on in Wake County now that we are kind of coming out of COVID. What is the situation that y'all are seeing right now in the budget office there?
Yeah, so I started in January, so I'm obviously pretty new to it. But since the start of COVID, obviously, in 2020, 2021, there was immense budget cuts. So now, developing the new budget, there's been a almost double increase in basically departments requesting stuff. So I think it was 240 requests now. So we've been combing through tons and tons of requests and then figuring out which ones to recommend. And a lot of it's departments asking for stuff that they were going to ask for in 2020, 2021, and they didn't get it because of budget cuts. So now the budget office is kind of wading through a bucket of new requests and then having to figure out which ones they're going to recommend and then present to the city manager. And he's fairly new, if I'm not mistaken. So they're still trying to figure out his approach to everything. So, and then of course there was some federal funding. So for certain things with, I think there was a program, if I'm not mistaken, where Wake County was utilizing hotel rooms for homeless people.
Right. It's a state program, but yeah, it was facilitated through a variety of means. Yes.
Yeah. So, and that's the money for that is running out very quickly. So they're having to figure out what they're going to do with that. I think Wake County is trying to purchase a hotel to continue that, but yeah, it's just been basically playing catch up. And a lot of the departments are trying to add full-time staff, so FTEs, and it's a lot of switching stuff around at the moment, trying to figure that out.
Absolutely. We're dealing with the same here in the fact that, typically what happens when you reduce budgets, the easiest ways to reduce budgets, and oftentimes the ways that end up getting done, is number one, you eliminate vacant staff. If you've got vacancies, you don't hire those vacancies. So you're not adding to your payroll costs. So that's a very common practice. The next one that's a very common practice is deferring capital expenses. And this is your equipment, your vehicles, facility improvements and upgrades, some of which are absolutely necessary. We did the same thing here in Rocky Mount, where we had not yet in the fiscal year 2020, in those final 3 months, we had still not spent the money that we had budgeted for purchasing replacement vehicles. And so we basically said, we're not going to buy any vehicles. We basically just decided not to spend that money. And then the next thing we did for the following year, because we didn't know where we were going to stand with respect to the pandemic, was that we didn't budget any money for vehicles. So that put us 2 years behind in vehicle replacement. And as most jurisdictions are behind in terms of those types of procurement. So as a result, you're now put 2 years behind, and now you're trying to play catch up, and you're trying to figure out how you do that. The good news is that revenues have gone up, but another challenge that's come up for a lot of jurisdictions in order to recruit and retain staff is they've had to drastically increase pay. We've done that here. Other jurisdictions have done that, and that's a significant increase in expenses because not only does it affect, of course, how much you're paying out, but it also affects your benefits that are tied to amounts such as retirement, 401k, and others. So definitely a lot of things going on that we're having to deal with as we start coming out of this pandemic. And one of those challenges, honestly, when you look at a lot of this stuff is, do the departments have the capacity to do what they're asking to do? Obviously, they're making these requests because they feel like they're necessary. It's not second guessing why these requests are being made, but at the same time, it's trying to figure out how much of this additional workload in terms of procurement or in terms of new projects can you really take on in the course of a given year. So it is a big challenge. Anybody else have anything else they'd like to add with respect to podcast 2?
I think the way they went about, the way the city council went about moving the services, and instead of gradually bringing them back, bringing them online. Because what let me get my words correctly. What you typically see is services being gradually brought back, and restrictions being placed. But if you're able to tell your constituents, no, we're bringing this back online, that gets for more support and more buy-in.
Okay.
In my opinion.
Okay. Anybody have any other thoughts with respect to what Tyra brought up?
It's Tyra.
Tyra, sorry. Thank you. Okay. Well, some very good discussion, and I'm glad y'all got something out of it. I mean, there's going to be a lot of further study by the academic community with respect to this episode. Basically, this was obviously not anything that had ever happened at the scale that it happened within governmental financial management in trying to determine what the effects were going to be of a policy implemented so quickly and so drastically. This was never something that we had seen before. And so we're still needing to understand it, because it is, now that it's happened once, it's entirely possible that it'll happen again. And so this is going to be an area, this whole episode, which is an ongoing episode. I mean, FEMA is still handling disaster assistance money that was facilitated for this. There's a lot of money that's still out there. We've all jurisdictions have received funding from the American Rescue Plan that they can use up through 2026. There's a lot of work still to be done, and there's going to be a lot of research tied to it. So it's going to be an ongoing issue. And for those of you that work in local governments or in state government, this is something that's going to continue, because it's not just an issue as they talked about with respect to resuming services or bringing services back up, or in how you do that, but it's also figuring out, what new services need to be brought, what can be retired. Those type of things have to be considered as well. And then another factor that's kind of been discussed to some degree has to do with the whole issue of work from home. There's on one hand, from a conventional policy perspective, most cities and counties want to see people return to office-based work, because that's kind of how our services are structured. They're structured on the idea that people work in offices, they live at home, services are distributed that way, land is used that way, policies are instituted that way, and to some degree, economic activity flows that way, and that's there. But the reality is that the public has gotten very used in a lot of places, including in the Triangle and other places, have gotten used to this whole concept of working from home, and it made it pretty clear in survey data that this is something that they want to see continue. And the reality is going to be that this is going to have a major transformative impact on how people work, how people live, and how they utilize the services and engage in the economy. And that's going to have a significant impact as well. So there's a lot that's left to be determined in that regard. So let's now go to chapter 9. Are there any other questions? So let's go to chapter 9, and we are talking about the need for information. And what this chapter really talks about is the fact that when you're trying to develop and implement policy, one of the key elements, of course, is to have as much information as possible, particularly to understand, who benefits, how they benefit, how people value a prospective policy change, which can be anything. They use an example of a park in this one. They talked about other examples. There is a lot that can be, there's a lot of information. The problem is for policymakers and policy analysts is that it is very challenging to obtain this information. In the book, it's early on in the chapter, page 245, he talks about there's three challenges with respect to trying to develop an incentive scheme for obtaining information, because nobody's in a position, particularly in America, where they are forced to provide information. A lot of times policy work, and one of the challenges to policy a lot of times is that it is developed, researched, and analyzed in a vacuum. It is done externally usually, and what that does is that it creates the challenge in that you're trying to develop a policy to benefit either everybody or a group of people, and there is a tendency, as you're doing the appropriate scientific evaluation and development, that you're kind of having to work externally of the people that are being benefited. And so there has to be a means to really find out from those people that are going to be benefited or going to be impacted by the policy, how it would affect them. And that requires trying to develop some type of incentive to acquire that information so that you know how to properly value it, how others value it, what can work and what can't work, so that you can try to identify potential externalities in advance, whatever the case may be. And it kind of goes over these three examples that, the challenge when you're developing an incentive scheme is that you're really trying to accomplish three things. One, and this gets to accuracy and honesty, you're trying to induce truthful revelation of the relevant information. So what you want is for people to provide you honest and accurate information. And like what we know, just think of it from the standpoint of polling. There is generally the belief that there's kind of a conventional belief that when people are being polled that they're telling you the truth. However, there has been some research that's been conducted that indicates that people may answer polls in ways that are not necessarily entirely accurate or truthful. There's the concept of push polling, where questions are, and of course this is typically done by people who are trying to manipulate the information. The pollster trying to manipulate the information for a particular cause or purpose, where they will drive somebody into trying to provide an answer based on the way a certain answer based on the way a question is asked. There's also other types of external biases that may affect how somebody answers a question to answer it in a certain way. And so that oftentimes leads to errors in polling with respect to, and of course, the most common example is with elections. Depending on how samples are put together, depending on how questions are asked, or depending on how people feel about answering something compared to how they actually feel about something, they may answer in a poll one way, but then when it comes to actually voting, they may vote a different way. And that leads to the errors that we often see in the lack of accuracy between political polling that's done prior to an election and actual election results. And there's a game kind of play between pollsters about who's going to get the most accurate result. And there are some out there who do a very good job, but the challenge for them even is being consistent in that accuracy. Sometimes they get it right one election, and then they don't get it right the next election. So that obviously is a challenge as well. That was, of course, the biggest example of that was in the 2016 presidential election. So there's a lot of challenges there, but whenever we try to incentivize people providing information, it's important that it be honest and accurate so that it can help really shape development of the policy in the appropriate fashion. Then, of course, you're trying to implement an efficient policy. You want the policy to be efficient, so you're trying to achieve efficiency. This, of course, is a pillar of public administration, and that's a challenge in itself because you're trying. The best way, of course, to achieve efficiency, as we've seen, is to try to find singular policies or limited policies that can achieve as much benefit without too much variation. You don't want to have to implement a policy that ends up creating too much variation in terms of the actual implementation for people based on their particular preferences. That's, we obviously know one size fits all doesn't necessarily work. It has a lot of limitations to it, and it can oftentimes create externalities. And at the same time, you're not trying to develop you're not trying to give everybody the solution their way, because that's a very inefficient means and likely exceeds the availability of resources to provide whatever product or service that you're trying to provide. Here it talks about being budget balanced, and I would say that kind of gets to effectiveness, and that it talks about here towards the bottom of 245. Third point says there's no free lunch. You can't offer to pay the firm's vast amount of money in excess of the benefits to be had for the information in order to induce truth telling. So whatever you do has to be effective. It has to yield a result. So those are all very important for us to understand. Obviously, government policy works in a variety of ways. The first, it talks a little bit in here about workfare in terms of the beginning. What are some of the conclusions that it tries? What are some of the things that it brings up with respect to trying to figure out and understand the implementation or the development of workfare policy?
Can you repeat your question again? I'm sorry.
So in the beginning of the chapter, he brings up the concept of workfare, which was a modification of prior social insurance, social welfare policy that really came into vogue in the 90s, in the 1990s, also known as welfare to work. It was also developed to some degree in the 1980s. What does the author say with respect to trying to figure out how to really, where is the information important with respect to its implementation? I guess there's no way of putting it.
Was it he was trying to, they were trying to find like the balance between encouraging people to work, but then also getting them to a point where they had like enough like money to live off of, because if they got this job they would get off the benefits, but those benefits could be better than the work, so they had like balanced that correctly. Is that incorrect?
There's a lot to that, yes. So the challenge with these programs is obvious. I mean, in this society in general, we don't see social insurance or the use of social insurance as a desired outcome. We want people to be self-sufficient to the greatest extent possible. That's kind of a given in terms of how we approach this policy. And so when it comes to these programs, whether it's the Earned Income Tax Credit, which was originally developed in it was talked about going all the way back to the 1970s, but it was put into law in the 1980s, which was kind of the first welfare to work policy. And then subsequently with the development of a full-scale welfare to work program, which was welfare reform, which we saw in the mid to late 90s during the Clinton administration. The idea is that you want people to transition into being self-sufficient. However, you have to structure it in such a way where people are not put at a disadvantage in trying to become self-sufficient. For example, one of the biggest challenges that's talked a lot about is eligibility of childcare. A lot of families have access to childcare in certain circumstances, depending upon where they are, and depending upon how the eligibility rules are written. And if anybody has better knowledge of this than I do, I was talking to somebody about it last night. Depending on your status, if you're in a situation, ideally the way we're trying to move it is to a situation where families have access to affordable childcare through through subsidies and other types of programs, to be able to put themselves in a situation where you have a single parent household, that parent is able to work because we can provide them with childcare. At the same time, those eligibilities, you have to find a way to structure the eligibility and to structure the program. So one, hopefully they move into a situation over time as they advance professionally where that subsidy is no longer required. But also to make sure that if something does happen where they perhaps lose where they lose their job or something like that, they're not put in a situation where they immediately lose their child care. That's I think the way it was being described to me by somebody last night was that was one of the weaknesses of some of the existing systems that exist here domestically, and maybe here in North Carolina, is that if somebody loses their job, as was the case with many people during COVID, that they were immediately put into a situation where they lost their eligibility and they found themselves at the back of the line being able to apply. Because I do know one of the challenges here in North Carolina is that there's actually more applicants for this type of assistance programs than there's funding available, because it's a restricted funding program. It's not like other programs which are more of a right-based program. Those programs are restricted in terms of the number of people that they can help each year for budgetary purposes. And so as a result, somebody is in a job, they have childcare, they lose their job, they lose their childcare, and then they're immediately put back in a situation where they have to wait to be able to be in a position to be able to qualify for childcare before they can find work again, which automatically increases their dependency upon other benefits. Does that make sense? Okay. But anybody have any other thoughts they'd like to add? Okay. So one of the examples, another example that's talked about in this book, and it begins on page 246, has to do with auctions. And one of the most significant areas of auctioning that the government does, and this is done at the federal level, has to do with wireless spectrum. The U.S. government controls radio spectrum of all types that's over the United States. So everything from your car radio to the high-end spectrum that's required for wireless communication through your mobile phone, that's all considered a public good. It's a public resource. It belongs initially to the government. And so the government at the federal level through the Federal Communications Commission has to allocate those frequencies and allocate that bandwidth to various providers for the delivery of the services that we all now use. The way that they do that is through an auction process. So what that auction does is that it tries to acquire, of course, the best price. We know we're trying to create the highest price to be able to determine who leases the asset. It's not pure ownership. It's more of a lease, long-term lease. And this is something that's been going on for decades. As communications have improved, there have been additional areas of spectrum. Now, of course, we're up to the 5G, which really gets to multiple gigahertz in frequency area that we're making available to telecommunications providers, and they acquire the rights to those frequencies through this auction process. And it brings up an interesting example in understanding the strategy of how a vendor or a telecom provider would go about deciding what the value is. So in the case of a provider, what are some of the things that we learn about how they should approach how they should value it? Because we understand that the government's role in this case is, one, to make sure that the frequency is being used. There's a demand for it on the part of the provider and also on part of customers. But then there's also the fact that the government wants to get the best price possible. It's revenue for them. So they're trying to get the best possible price. So what do we need to understand? What is it that the purchaser or the bidder needs to understand in order to be able to really facilitate the transaction to meet their needs?
They would need to know the frequency and the detailed information of it.
Yes, they would, absolutely. What else do they need? What else do they have to determine for themselves?
Would they have to know possibly other competitors' prices since everyone's submitting a bid?
Well, that would be wonderful, but the chances of them knowing how much everybody's going to bid is pretty unlikely. In a situation like this, it's highly unlikely that you know how much your competitors are bidding. So if you don't know how much your competitors are going to bid, what do you have to figure out? Because these auctions are not, even though they're public, they're not like a normal auction where people are just quoting prices. These are usually done as, right, and Drew's correct, there's a gag rule, but a lot of these auctions are done through a sealed bid process. It's the same that we use in procurement and purchasing, where the various vendors that are trying to quote you business for something you're going to buy or something you're going to sell in this case, they present sealed bids at a particular time. We review the bids and determine which one has the best price. So if you're a company that's wanting this frequency, how do you determine what price you should issue, what price you should go with? So what you have to do is you have to figure out how much you actually value it. It's the same as in any auction. How much do you value what you are trying to buy? It's the same that when you're trying to purchase something, one of the factors that goes into your consideration, and it's something we may not necessarily realize on its own, but you have to decide how much you value something, whether you're buying a car or a home. And in the case of business, when you're buying an asset that you need for the facilitation of your business, there's a value that you have to place on that. So what you have to do is figure out, what do I value something? And naturally, some people think, and it talks about here, that in a lot of cases, people think, well, I may know what the value is. You know, you do the analysis, you figure out what the value is to you, and you figure that out from a business perspective, so you make sure you make money on it. But then there's this kind of thought that obviously, if I'm trying to buy something, I'm trying to get it for the lowest price possible. And of course, what that does is that it really doesn't achieve equilibrium. And what the author tries to make in this argument is, in reality, that the value is really that it's best in most situations to present your bid with full value. That too often what happens is people, of course, try to undercut in a purchase like this and create a circumstance where they actually try to, of course, buy something at a value lower than it really is for them. But the reality is that if you want to have the best possible chance of being in a position to purchase, you really need to do it in proper value. And that's what's often referred to as a second price, or the weekly dominant strategy. So when we talk about weekly dominant strategy, it's a weekly dominant strategy for each player to bid his or her true valuation. You know, there are, and of course, it really depends upon the process. When you have a process where multiple competitors can compete, where multiple parties can compete to present a price, the true valuation from each one, obviously, there's going to be one that's going to win out more than likely. There's one that's going to place a higher value on it than everybody else, which is still true for them. And as a result, they win the bid. But the fact of the matter is that what it does is it also ensures that, in this case, the government gets the best possible value for it. There are a lot of cases in the past with these types of asset allocations where governments have gotten far less than value for it. And the reason why is those are often closed bid situations or exclusive bid situations. And those happen a lot of times with privatization. There are some examples, I think, given, I don't know if they were given in this text, they may have been a different one, but we've talked about circumstances with, one example is in the state of Indiana. The state of Indiana operates toll roads, and they had a company come to them and make an offer to basically give them a certain amount of money, a significant amount of money over a very short period of time to privatize the toll road. And they did not do really any comprehensive valuation on their end with respect to how much it was worth. And so as a result, when they sold the toll, when they basically, it's a long-term lease, I think it's like a 75-year lease or something like that. When they sold the lease, they actually sold it at a price that was woefully undervalued. This company that acquired the lease woefully underpaid for the value of the asset. So the valuation is actually something that has to be done by both parties. So in the case of the government, what they also have to do is that they also have to do their work. And this is a challenge as well, because a lot of times, particularly in private auctions, there's the value that the existing owner places on it as well, and the bid has to meet or exceed that minimum. So that is something that has to be taken into consideration. So we also have the issue of trying to value a public good, and this is this kind of starts on page 248. And they use the example of a park being proposed in partnership with two jurisdictions. And there are three different areas we can look at this and trying to figure out how do we find out what the preferences are and how do we find out what the value that residents, taxpayers have for this particular investment. Someone explain to me what split the cost means.
It means that everyone should share the cost of like what's good for the public.
Okay, so in this example, it basically says that, each jurisdiction would be responsible, say, for $50,000. If it's a $100,000 project, each jurisdiction would be responsible for $50,000. So the book, so as the author tries to evaluate this method, he finds that it's inefficient. Why is it an inefficient way of trying to determine value?
Because there's variables when the two parties have different valuations of the good. So, if someone values it at a certain number higher than the other party, then they'll get the full benefit of the good while only bearing half the cost, and that would put the negative externality on the other party.
Correct. Correct. In most circumstances, when we share something, typically, and it could be anything like from sharing an apple to, in this case, sharing a part. If you have multiple parties, nobody values it equal. The value is unlikely to be equal. And so that, as Jack says, that creates the externality that there's an inefficiency from the standpoint that eventually somebody ends up having a lesser value than what they have to invest. So an even splitting of the cost is not necessarily efficient. The second option that we have to look at is veto and split. So someone explain that to me.
It's similar to the splitting the cost, but in this case, you ask the parties what they value the good at, or whether if they want the good at all. And
right, it's basically
what they pay.
You create kind of a binary situation where they either say yes or no. And of course, as a result, if they say no, then either it's scuttled or the other party assumes full responsibility. If they say yes, then it is split. Where's the inefficiency in this case?
They could potentially lie about whether or not they value the item.
That's true too. That's true. That's possible. But and again, it's and again, it talks that's possible too. It also talks about here, kind of giving this example. Is illustrated, a player wants the public good provided if and only if their valuation is greater than 50,000. So that's another possibility that, as Karen points out, you still have the value. In some cases, a person may only want it if the value is greater than the investment, which violates, the concept of trying to achieve a utilitarian purpose. That they're willing to have something, but only if it creates a net value. And so as a result, they could possibly say no if the value is simply as much or less than what they're putting into it. So again, it doesn't take into consideration the degree of value. It only basically says, do you value it or not? And it doesn't necessarily take into degree. And for some people, that may be dependent upon how much they actually value it. So we start looking at other options, and it talks a little bit in here. Are there any other ways, however, that we can try to figure out informatively how people would value it so that we can determine if it's applicable policy?
The book talks about the second best mechanism, where you move towards Pareto efficient most of the time.
Right.
Yes, instead of all the time.
Yeah, and it kind of goes back to, it kind of starts off with this discussion on page 252 about this concept known as the revelation principle, which if there is any complicated procedure that gets people to review their true valuation and then implements the utilitarian optimum, there's also a very simple mechanism, which is called a direct revelation mechanism, which can achieve the same thing. So in other words, for every circumstance is very complicated, there's a simple way of doing it. A direct revelation mechanism is a procedure in which the government, one, asks people to state their valuations, which can take both quantitative and qualitative forms. It's not always quantitative. Most of the time it's qualitative, which can be a challenge in itself. And then also, before they make their statements, they also have to lay out whether or not the public good will be provided and who will pay what for each possible pair of stated valuations. So it requires the public not just to think of themselves, but also to think of the public in general. And so this is a way of kind of diffusing the situation where, again, whether it's by adding the value or by putting more weight to the public good value, it allows the public to kind of re-examine the issue. I can use this with respect to the construction of our event center here in Rocky Mount, which opened back in 2018. In the case of the event center, first of all, this was the largest public project we'd ever taken on. It was over $40 million. And it was a situation where we were building this multi-purpose event and banquet facility and all types of things. I had to give a tour of it today in downtown Rocky Mount. It's an amazing facility. Obviously, for something like this, you have to go out and borrow money. There's operating costs. There's a lot of expense associated with this. And naturally, that can kind of create a circumstance where even within a jurisdiction, you're going to have multiple parties that are either going to be for or against it. And if you if you go from it from the standpoint of, well, what is the individual interest, there's going to be a lot of people who are going to express, well, it has no value to me because I wouldn't use it. So, and that's absolutely true. In any kind of facility like that, or like an art gallery or any other, there are various types of facilities that are out there. They're going to be members of the constituency that don't see any value of it to them specifically. But there is the issue about the public good value of it. And that's where typically when we do policy, typically when we're advocating for policy, we have to direct people in that way. Now, naturally, there can be other arguments about, what are the trade-offs in those given situations? That's totally understandable. For us, in terms of advocating for the event center, it was really to show the public good value from terms of the public's utilization of the facility and how they could maximize the value, to also looking at from the perspective of economic development. And of course, as we built the facility, we were able to change some minds, not everybody. You're not going to have universal acceptance in a case like that, but you do get enough acceptance to be able to move forward with a project like that and an investment of that scale. And this is the challenge that people deal with, that is often dealt with in a lot of projects. For those of you that are familiar with DPAC, Durham Performing Arts Center, that project was not well supported when it was initially proposed. In fact, they had a referendum with respect to issuing a general obligation bond to pay for it, and that referendum actually failed. It was funded by a different means, and there was a lot of opposition to it given its cost and given the size of the facility. And of course, what we've seen in general is that the Durham Performing Arts Center, first of all, unlike a lot of facilities of its type that are publicly owned, it actually pays for itself. And second, it's had a tremendous impact on economic development in downtown Durham. So it's really it's a challenge, because you have to make sure when you're doing that, and again, this is kind of going back to that second best option, is you have to encourage people to look beyond just personal interests and also incorporate that utilitarian perspective to be able to achieve and be able to really understand a kind of shared value or a combined value that people have to justify these types of projects. Now, if they don't see that public good value, or they see that it competes with private goods or with the private sector, or the public good is still not sufficient for the investment, then the policy is likely not to happen. And that does happen from time to time. But incorporating and understanding the public good is important. Are there any questions? Okay. So now let's talk about monopolies. There's a lot in here talking about monopolies, because monopolies, while are generally not desired, they are a fact of life. It is not entirely possible to have open competitive markets in every various sector. What's an example of an active legal monopoly that exists? What's an example you can think of?
It's not, this could be debated, but the broadband situation in many areas of North Carolina is a legal monopoly. There's the telecoms have, they take advantage of monopolistic conditions, and competitors can't feasibly enter the market, and public entities can't either legally.
You're absolutely right about that. I would think of it more of as an oligopoly, because it is restricted to a certain number of vendors in most cases. Certainly, the examples that are being given by people on the chat are absolutely correct. Most of the fundamental public utility services are monopolies. There are very few places in the United States where electricity, natural gas, or other services like water or even trash removal, particularly on the residential level, are competitive. In particular, that's the case if your jurisdiction provides these services. In North Carolina, we have over 60 municipalities that provide electric service. Rocky Mount's one of them. But even in places like Raleigh, where it's an investor owned, there's only one investor that provides that service in Raleigh, and that's Duke Energy. So these are legal monopolies, and as such, they are regulated with the understanding that they are monopolies. And for example, for utilities, primarily we'll talk about electric, but for electric utilities in North Carolina, the private investor ones are regulated by the Utilities Commission, the State Utilities Commission, and then the municipal ones are regulated by their municipal governments or municipal authorities in the way that they're set up. So what we deal with here is that you've got a situation where the government is actively involved in regulating a monopoly. And it could even be a situation where the government owns the monopoly, as in some cases with respect to electricity at the municipal level. So that is possible. So the goal here is, of course, to figure out how to achieve efficiency in this relationship to balance the business interests of the monopoly and the interests of the customer, because the customer does not have a choice. The public does not have a choice in terms of who provides this service. And in these particular cases with utilities, these are essential services. So you have to figure out, you have to kind of figure out certain things, and it talks in here about a variety of examples, and it also talks in here about this concept of what's known as monopolistic equilibrium. And so what we're meaning with here is that that what we're trying to achieve, in a monopolistic equilibrium, what you're trying to do is balance production by the monopoly, whether it be electricity, so that it can be priced at a way that it balances the interest of the customer with respect to the interest of the business. That, of course, can be a challenge, because because obviously if the producer produces too little, it can raise the price, which of course is to the detriment of the consumer. But if it produces too much, it creates a surplus that it's not able to sell, and as such, it's an efficiency loss for the business. So that's something we have to take into consideration. When we look at efficiency in these types of circumstances, we have this concept known as deadweight loss, which can occur. And this is kind of what we try to avoid. Deadweight loss exists. It says here on page 263, the deadweight loss exists because at the monopolist's preferred level of production, there are still consumers whose value for the product is higher than the firm's marginal cost of production. Hence, the deadweight loss represents social welfare that could be created if the firm produced more. So that's deadweight loss with respect to the consumer. So it kind of lends to the issue of trying to then work. What are some examples of how, trying to think here, what are, let's focus on electricity. So some of you may know some, but what are some examples of how, of kind of from a production standpoint, or in this case, a supply perspective, how the state regulates these monopolies? What are some examples of that? They can be federal or state. So there's the Utilities Commission, but I was looking for a specific example, a specific policy. Rates, yes, absolutely. That's probably the most significant one. So when utilities want to adjust their rates, they can't just announce we're going to adjust our rate. They have to get approval from the Utilities Commission for their rates. And they have to present their rate plan to the Utilities Commission. They have to provide backup. And what that does, in order to try to maintain some degree of equilibrium, is that the Utilities Commission has to evaluate the rate being proposed and the projected revenue and the projected profit for the utility, and it has to balance that with respect to the customer. So the utilities have to provide a tremendous amount of information. In North Carolina, even after the Utilities Commission makes its recommendation in terms of what it will allow for a rate, that rate can actually be appealed. And our Attorney General has done that in recent years with respect to Duke. Another is that the legislature itself can impose restrictions with respect to how power is produced. In 2009, I believe, the North Carolina General Assembly passed laws that required that energy producers and energy distributors in North Carolina had to maintain a certain portfolio of production from renewable energy sources. So that, of course, led to the expansion of solar farms, which you especially see here in Eastern North Carolina and former agricultural sites, because the companies like Duke were required to produce a certain percentage of their power from these renewable sources, and solar is the most common one here in the state, along with hydroelectric. But so those are some examples, but these are circumstances. Does anybody want to add anything that they know in particular with respect to rate setting? Okay. Just so that you know, when it comes to rate setting for municipal-owned utilities like water systems, sewer systems, and municipal electric and gas, our focus is on recovering costs. So when we do rate studies, when we do rate evaluation, we're not trying to make money on the service. What we're trying to do is, and Melissa, excellent point as well about the deposit policy. What we're trying to do is project, because we don't want to raise rates on a regular basis, but what we're trying to project is what our financial needs are with respect to providing the service, taking care of maintenance and expansion of the service as necessary, improvements to treatment facilities and production facilities. All of that has to be factored. So you go through a cost with what's known as a cost of service study first. And from that cost of service study, you then figure out what your rate needs to be, or your rates, because there are different rates for residential and commercial customers and industrial customers as well. And you figure that out, and that's how you come up with your rates. Then you present that to your governing body, and they're the ones that make the approval. But we're not required in North Carolina to present rates to the state, because obviously there's a publicly elected body that's responsible for approving them from the standpoint of the city council. So obviously there can be situations with uncertainty. There's some that talks in the book. I'm not going to spend much time on this, but when you're dealing with regulation of utilities, you have uncertainty that can be factored into it. And then there's the issue of regulatory capture. What is regulatory capture? Can somebody define that for me?
I'll take a stab at it.
Sure.
Regulatory capture is where the government sends in regulators, and the concern is whether or not the regulators, for lack of a better term, jump in bed with the people that they're supposed to regulate. And that's why we always see the back and forth between somebody going to work for a industry and then coming back and working for the government, and back and forth, because basically they're playing both sides of the field to work to their advantage. So the only way to really compensate for that is the government gets involved in setting up certain policies that doesn't allow that to take place.
Absolutely, and we often refer to this as the revolving door, and it can happen in monopolized industries or non-monopolized industries. That's talked to a little bit degree. If you've seen the movie The Big Short, they talk about that with respect to financial regulators who oftentimes work in industry. Why would it make sense? What are some of the reasons why a regulatory agency would want people at least who have experience working in the given industry?
If they have that experience, so that they keep their prices low.
Curtis, you're kind of muted at the moment. I'm hearing it low.
Can you hear me?
Yeah, I can hear you now.
Okay, I had to step up a little bit. The reason that they would want somebody who's worked in the industry is because that person would actually be able to tell you how much that is costing to produce whatever that unit is, whatever
Right.
that unit of service is.
Right, they have the actual experience and knowledge to understand the industry and can provide better information. So the reality is that simply that you've got to have people that have some relationship with the industry. But at the same time, as it talks about here with respect to avoidance, you have to find ways to still make them impartial, to still make it to where their interests are the interest of overall the government. And again, the government in this case obviously has a responsibility to the constituency, to the citizenry, in terms of providing appropriate regulation to ensure their interests. Those interests are not merely exclusive to, however, the public, because there's also the fact that in most cases, it recognizes that it is giving legal license to this monopoly. It's allowing for this monopoly to exist, and that it has to enable this business, this monopoly, to operate in a fashion that allows it to be sustainable. We've seen in other countries when certain industries have become state-owned. The best example I can think of is the oil industry in Venezuela. When it was basically taken over as a state-controlled industry under the Chavez regime, they basically took the assets of the company and they took this formerly private industry and they made it a state-owned industry, and basically abused these private assets. Took their cash, took their other assets, and made them to a point where they were doing a lot to serve the people, but were not doing what they needed to be able to sustain their business. And as a result, the business started to falter significantly. Venezuela has one of the largest oil reserves in the world, and its production of that oil is not where it should be with respect to where it's been in the past. That's a major challenge for that nation as it continues to go forward. But so from that standpoint, the regulators have to be mindful in their work that while they're obviously trying to serve the best interest, to make sure that these monopolies are not abusing the public, are not abusing their position, And that certainly is the case with rate management, with electrical utilities and other utility services. You don't want them to obtain excessive profit. At the same time, you realize that these companies do have to make a profit. So it is a challenge and a significant balancing act. And again, one of the aspects that's a challenge is making sure that the people that are involved in regulating the industry are still on your side with respect to on the side of the government in terms of achieving that balance and that accountability to the public, and are not simply showing or not simply working to benefit the interest of the monopoly. Are there any other questions with respect to Chapter 9? So when I was looking at the examples, at the exercises, they were pretty mathematical in this book. So I wanted to come up with one. I had to come up with one on my own, and I hope that I got this right. So what I thought I would ask is I want y'all to, for the group exercise tonight, and I'll put you all in probably groups of 4 or so, is there's 2 questions that I want you to talk about as a group, and then we'll get your feedback. And this has to do with fire protection, which is an important public service, but it's also one that does have some challenges to it. So in terms of how fire protection is provided within a community. So what I want y'all to think about is what are the challenges in terms of acquiring information for policy on community fire protection. So kind of think about that, because this really gets to understanding, how we do these, how we work with these fundamental services from a strategic perspective. And then think about from the reading and from our discussion, what are some of the strategies we can apply to overcome these challenges. So what I'm going to do is give you 15 minutes, which also is your break time, and then we will have a discussion and then we'll wrap up. Does that sound good? Okay, so there'll be 5 rooms, so let's have 6 rooms, so no more than 4 in each room. So we've created them, so y'all will be switching over to your room, so I will see you all in 15 minutes. Okay, I want to welcome everyone back. Sorry if I did, what I want to do is, I realize I probably should have done a better job maybe introducing the subject a little bit. Fire protection, obviously we kind of think of it as a core service, and so I can imagine it's kind of the issue of, what is it that we're trying to figure out, but there are a lot of different questions. Like, for example, one of the issues that a lot of county governments are trying to deal with right now is that typically counties have when fire protection was established in counties, it was organized on the basis of volunteer departments. And so when you live particularly in unincorporated areas, but even in some towns, you have these volunteer departments that are obviously comprised of volunteers that provide the service. There, of course, are some additional resources that have to be provided, and those are paid for with a fire levy, which is a special property tax rate that's for the residents of the given jurisdiction. Typically, the way fire works in most places is that you have a set jurisdiction, and that jurisdiction receives fire from a particular department. So what you have to do, what's happened in a lot of cases is that fire departments, these volunteer fire departments, have run into situations where they don't have the volunteers that they need to provide service at the levels that need to be provided. You have formerly rural areas that have been suburbanized. You don't have the same interest in volunteering. So what's happened is a lot of these departments are having to supplement their staff, particularly during certain hours of the day or during certain shifts, with professional staff, which obviously increase cost. So that's an issue that creates a challenge, because when you're looking at transitioning these services over from volunteer to paid professional, there's obviously a need there, but there's also an issue of trying to obtain the information in terms of how much a resident's going to value it. So that's one example. The other example that's come up, that this is a more of a past example, has to do with that about 25 years ago or so, a lot of fire departments started getting into the first responder service. So not just responding to fire calls, but also responding to EMS calls. This does not mean that and so in a lot of cases, your firefighters are also paramedics and EMTs. They may not operate ambulances, but they oftentimes are the first people to respond to an emergency call. That's the case here in Rocky Mountain. That's the case in a lot of jurisdictions, that firefighters respond to traffic accidents. They respond to calls with respect to people that are feeling bad, like a heart attack or something like that. And oftentimes they're having to provide that first response care until an ambulance can arrive to transport that person to a hospital. So there's questions there. And then the third example that I can give has to do with existing departments, is how they adapt to the needs of a growing community, whether it's growing in both in population but also in land mass. Because really what's key in fire department operations is response time. How quickly can you get to the public that you're there to serve? And whether it be through annexation or whether it be through the development of previously undeveloped areas of a city or of a county, there's a need a lot of times, and it's like something we're dealing with here in Rocky Mount, of adding facilities. And again, the question comes when you're looking at it from the standpoint of not only is there the money involved, but there's also the issue of finding a location and staffing it and making those commitments. How do you achieve those values? So those are just a couple of examples that I wanted to give, and y'all can be thinking about that. But I'd like to give an opportunity to hear what y'all said with respect to this topic in your conversation. So what are some examples that y'all can give of some of the challenges that you would face in trying to obtain the appropriate information?
Group did come up with the fact that because it's a mandated service or seen as a mandated service, that there's a high value because people want their homes protected, but their willingness to invest when they feel like it's something that should be provided to them may skew any responses that they're giving, or their willingness to actually pay anything more for the services. So the value is skewed.
Excellent. Good point. What's another one?
Something that I had mentioned, maybe in like more rural areas, could be access to like technology or broadband and just people's engagement with their government, right? So if you're in an area and you're trying to develop a community fire protection policy, and you have, let's see, a virtual only meeting, but not a lot of people have access to broadband or have a laptop or a phone even to like call in. I mean, their voices aren't getting heard. And it might be kind of on the lines of like population density. Like the people who are more vocal are getting their needs more addressed.
Or even on the flip side, from the standpoint that when we do, say, public meetings that are in person, a lot of times they're scheduled at times or locations that people may not be familiar with. In general, a lot of times when people, and of course we see this now with the massive migrations that we're seeing to areas like Raleigh, people are simply not aware of what services are provided and how those services are provided. They don't have that knowledge of how their city or county works, and that can pose a challenge as well. They're disconnected in a variety of ways. What's another one?
Also on Branson's note, you have people who want to go to the meetings but can't get off from work. I think specifically low-income communities where the head of the household works multiple jobs.
Absolutely, and that's definitely one as well. Anybody else have any others they would like to share? Okay. Sorry, go Jack. Go ahead, Jack.
Sorry, Kenneth. We mentioned that like a problem potentially of information sharing and like of data collection. It's a public good, but it's limited. So you would have to be strategic in how you place those resources, and there could be problems with determining at-risk areas or determining where to best put those resources. And especially in a smaller community, there might not be other departments available to help with those data sharing or information sharing processes.
Okay, that's a good point. Okay, some excellent examples. So what are some ideas we have to address these challenges?
In my group, Jessica mentioned advocating the community and kind of raising awareness like that way as like an efficient way to communicate with the community what the service is about.
That's good. And I will say fire departments in general do a lot of engagement because they obviously, there's this belief they want to make sure that people are aware of what they do. And of course, a lot of that is the education programs that they provide to encourage fire prevention, but also just simply getting an understanding of what they do in other ways beyond just simply fire prevention and fire protection. So that's a good one. What's another strategy?
Another thing that I thought about, I mean, I don't know if it would really work, but how just bringing in experts, kind of like how for COVID protocols, not that the CDC has the best policy recommendations, but in a way, a lot of states were basing off their policies off what CDC was saying.
That is one as well, and it definitely helps share it, and communicating that information is important. The most common metric, the kind of the standard metric that we have when it comes to fire protection is something known as the ISO rating. And it is it's actually the agency that does it. It's not a public agency, it's actually a private agency, but they basically evaluate fire protection, and this is used in calculating insurance premiums. And the lower the score, the better the protection that you have. So you want the lowest score possible. And it can be anywhere from a 1, we actually Rocky Mount is an ISO 1 city, all the way up to like a 7 or an 8. And what that is an evaluation of your department in terms of its performance. And so a lot of times an argument that we make for the position of our department and the resources we put there is that this directly creates value for the resident from the standpoint of having an impact on their insurance premiums. And this is true with residential, but especially true with commercial and industrial customers.
I was going to bring up that very thing because when the fire departments would present to the county commissioner for their funding, it was a big highlight. I mean, for the community to understand where their taxpayer dollars were going. And the commissioners were very aware that how they applied it, how many departments they helped to build or bays they helped to add or fire engines that they purchased. That the taxpayers could then reap benefits to their own homeowner insurance policies and so forth. So the data itself conveys a lot to the strategy of getting the buy-in.
Absolutely. Any other strategy ideas?
Along those same lines, I mean, it's more of a community thing in the advocacy part, but personally, I can say we used fire departments as polling places when I was a county director. And the way that we had those conversations was to say how we serve the same public, but for different reasons. And the fire departments were wanting the communities to buy in to what they offered and see a little bit more behind the scenes other than when they showed up to put out a fire. And so by having it as a polling place, they could, the community got to lay eyes on it when they couldn't be at the meetings or couldn't be volunteers with the fire department. But they do other community initiatives that, like the seatbelt, or not the seatbelt, the child
safety
the
seat.
car
Yeah.
seats. Yeah,
Car
thank
seat,
you.
yeah.
Things like that. So.
Absolutely. There's a lot that they do to try to reach out to people. And I mean, fire departments are not as accessible as they used to be. There are a lot more secure facilities than they perhaps were when I was a kid, where you could kind of walk up to one and just, hang out. And of course, firefighters were there hanging out. They don't do that anymore. But it's a lot. There's a lot that they do, and that helps facilitate an understanding of the value that they provide. And this is the case with any kind of public service. Catherine, you're right. Smoke detector testing, as well as distribution of smoke detectors. There's programs that are sponsored by a variety of agencies, insurance companies. The Red Cross is heavily involved in them, where they do smoke detector installations in homes. But the issue with any public service, and it's kind of a theme that when we're talking about information, really, it's that information of helping identify value. So if there's anything you get away from to get away from this get with this chapter in terms of application, is that it's really important to understand the value that people place on what it is that you're trying to achieve with policy, because that's very important. And I will say this: it can be very surprising what value people place on things. And a lot of times that helps explain why governments do things differently than perhaps would make sense if it was being done by a private provider or was being done at a different time. Like the example I always give is we have a senior center here in Rocky Mount, and for a long time we had a printed newsletter that was distributed every month. We had a new senior center director come in, and one of the first things he did, because we asked him to trim his budget, was he said, well, let me email it out to our members. He said, I've got most of to our attending residents. I've got most of our resident email addresses. Well, sure enough, our city manager was at church one day, and one of the fellow church members comes up to him and complains to him about the fact that they didn't get a printed copy of the newsletter. And so naturally, we reinstituted that about 2 weeks later. So these types, it helps understand, and I kind of refer to it as a portfolio, that while in a lot of cases some of the things that government does are outdated or kind of inefficient concepts and policies and practices, there is value placed on them by residents, and having that information on what that value is essential to being able to, whether it's developing new programs or reevaluating existing programs and policies, is essential. Are there any other questions with respect to Chapter 9 and what we've talked about tonight? Everybody see my screen? Okay, good. All right. So our next class will be next Thursday, March 10th. We will wrap up, I believe, the constraints of good governance with chapters 10 and 11. I hope to have some additional material in the week 8 folder. So we've come to the point where tomorrow I will email you the course reading and lecture assignment number 2. It'll be another Google form, and the deadline will be 6 p.m. next Thursday. And again, it'll be 2 or 3 questions with relative to what we've done so far, what we've done in these last several weeks since the last assignment. Are there any questions? Well, in that case, I want to thank everybody for tuning in tonight and for participating. And if anything else comes up, just email or text me. But y'all have a good week, and I will see you next Thursday on the 10th. Take care.
Thank you.